Right. So I'm the Hunter here. I'm the dealing manager for the affiliate center team. Okay, so very quickly before I touch on the market depth, then we'll move on to the actual live demo on the trading platform, as well as teaching you all how to navigate the Hoyos web platform. Okay, Telegram chat. Okay, later I will share Telegram link on the chat later. All right. Okay, so for SGX market depth itself, right, we call it a level 2 market data. Basically, it shows a buy and sell order of each price level, right? So each price in the queue. So right now, Singapore SGX, they have 30 queue levels. All right, so a maximum queue is 30 for the normal one, if not for FOST. All right. And then but for market depth, it shows up to 20 levels of the pending for both buy and sell. All right. And then we have show also the different price levels that people are willing to buy and willing to sell. Later we will show you. But if you see on the right hand side, it's basically when you right click on the stock counter name, there's a market depth option. Similarly for the app itself is when you click on the individual counter and there's a market depth, and when you scroll down below the chart itself. All right. So market depth itself is complimentary currently. It is up to 30th November. All right. And then they might or might not continue. That one we are still pending confirmation. Basically, you can apply for free through either the platform or through the website itself. With the app or app or website lah. Right, both is free to apply currently. Okay. So how does it look like? So basically, it's a real-time market depth itself, right? So of course now today Saturday is not a live trading, but during actual trading hours, it is a live data, meaning that the price will update lifetime as well as the volume of the queue for both the buy and the sell side will also be updated consistently on the lifetime, right? Then also for orders, the ORDS is basically the number of orders that is in queue that is forming that number of B volume or S volume. Right, because the B volume S volume is definitely not only one order. So there's multiple orders forming into one the total volume of queuing, and that's the number of orders it forms. So it actually gives you some information along the way of how active the market is, or how much how many market participants is there inside, or maybe how many orders is queuing for that particular price level. Okay, so basically the main aim of SGX market depth is that it gives you some idea to do three things. One is to check on the liquidity. All right. Second is to actually help you to optimize your buying and selling price decision. And third one is that you can actually use it to form also your price support and resistance level if you already have a position in the counter itself and you're looking to either buy more or sell your holdings. Okay, so for market depth itself, other than market depth, we do have another thing called a trade summary. So market depth is the ongoing live view of the queuing system, meaning what's the demand and supply of the particular counter. For trade summary is the quantity already done on that day itself. So let's say today is at 9 a.m. The trade summary will be quite little because it's only start of the trading day, but you see a lot of active trading in the market depth. But later on at maybe 3 p.m., 4 p.m. before the market close, you will see that the trade summary actually acts quite well to also supplement your information for trading as compared to only the market depth. You should only see what's the queuing, buying, demand, and supply of the timing itself. But the trade summary shows you over the night, the full day, the full trading day, 9 a.m. to maybe 3 or 4 p.m., what is the actual volume done, and what is the price spread between the orders done, and what's the volume involved. Right, so it also gives you the weighted average price of the counter of the day. So it gives you some idea whether you're buying above or below the market of the weighted average price of the transaction that day itself. Or maybe it's a trending upwards or trending downwards. It might give you certain these ideas as well. Okay, so block over here is basically the order that is actually done during the either through two things. One is we call it a merit deal, meaning it's an off-market decision to buy and sell that particular counter for a block quantity. All right, so there's two market participants, maybe A and B. Maybe they are both financial institutions, or maybe they are both rich individuals, high-net-worth families, or corporate entities. Then they decided that they will transact between the two of them. Right, so instead of going to the open market, they will actually do it at the block. So normally it's before market open or just after market close. All right, or they actually have the market matching opening itself and closing. They might also be classified under block itself, because the bid and ask is basically volume that is done when a buyer buy directly at the ask price that they show as ask. If the seller comes directly down to the bid price to sell, it's called as bid. So you can see this as a pressure of either there's a more buying up pressure or selling down pressure, So in this case, in this example of the image, you will see below, just purely through the bid and ask, you see that the green color is more in general. So it means that there's more sellers, there's more buyers that come up to buy at the ask price. So there's a bit of a more of a buying pressure for this particular sense if you compare this particular image itself. Okay. So same thing, you can actually see what is the order. So at different price level, they show 20 price levels. At the price level, what is the price and what is the corresponding buying volume or selling volume in place, and whether or not it is more of a support or resistance. So we compare the left hand side and right hand side. The left hand side, the quantity is only 30K and 13,000 plus, right? So yes, it's more than the bottom, but it's not really a very strong support per se. If you compare to the right hand side, there is 155,000 forming out of 53 orders to sell at 14.2. That is more of a significant of a resistance than compared to the support prices on the left hand side, where the prices, the volume is not as big of a disparity in terms of the queuing itself. Okay. So same thing. This is the trade summary for this venture at the point of time that I actually took this particular screenshot. I think in June. Right. So you just show same thing. The bid and ask, there's more people that buy up, plus there's a larger green chart right over here in the overall, right? So this is how you can actually get some idea of what is the trading pressure and price levels. And if you can see, the support was 14.2. 14.2 was, of course, not yet done at this point of time in this day. But 14.2 was the price that people want to actually sell at if possible. That is like the resistance on top. Okay. And you see over here, there's more volume done at 14.14 and 14.15. And currently, the price at the point of time where I screenshot this particular counter, it was at 15.15 and 16. So 15.1514 is already showing to have more volume done. So it might not be that there's no support there. It might be just that as and when there was more buyers supporting that price, there's also more sellers that might be willing to sell at that price as well, right? But there seems to be more buyers lah. You see on this particular aspect, because for 14.4 and 14.5, there is more ask volume than the bid volume. So meaning there might not be that many sellers selling down at the bid price when it's 14.14 and 14.15. Okay, so the important thing to take note of what we extract is we extract the B volume and S volume. All right, so when you actually see on the normal platform itself, the B volume, S volume that you see on the platform along with the last traded price and the volume total done, is only that best queue and for buy and ask, meaning the current market price of the bid and ask. What is the B volume and S volume? But if you see market deck, you see 20 more levels of B volume, S volume. That's basically it, right? The total volume of shares transacted is also important, all right? So take note of that because if the total volume of shares transacted is very large and the queue is small, then it's likelihood that there is always chance that the trading of the day might go through that particular price level. But if the trading volume is very small, let's say only a few 100,000 or even less than 100,000, but there's more than 100,000 queuing for that price level, it is very unlikely that the trading of the day will pass by that particular price level. That's one way to actually determine. Then there's also, of course, the day high and day low and open prices, which also helps you with your decision making. Because if your support that you see on the market depth or the resistance that you see on market depth is actually above the day high or below the day low, then it might or might not be significant because the actual day trading have not yet even reached that price. It's just that people might be looking to sell or buy at that price more because of the whole number basis, maybe $14, $15, that whole number basis, psychological manner, or it was a previous support resistance level of the counter itself. Okay, so comparing market depth with transacted volume, like I mentioned, if let's say in this case that you see for Genting Sing, the queuing volume for both the bid and ask is like 1+ million to 6 million, and selling volume is around 5 million plus to 6 million as well. If the trading day, if this particular counter, let's say we do not know this Genting Sing, and the actual trading volume of the day is only at, let's say, 50K, then it's very unlikely that the trading of the day can pass by either both the bid and ask because it's 1+ million queuing on both sides, more than 1 million. But if let's say the volume done on the day on top that you see on the screenshot on top is 9 million, right, for a trading day, it's very, very likely that if there's any selling pressure coming in, it will pass by the 0.875 because it's only 1 million shares supporting that price. But and the next price is 87. So to pass by 87, it must go through first the 1.2 million before the 6.7 million. Total is around 8 million. So there is a bit less likelihood. So if you are a buyer looking to buy this counter, you will know that if I queue at 0.865, I'm queuing behind 15 million shares. So the likelihood of me getting my order done is not high. But if we queue at 0.87, there is still a chance. There's still a chance because this particular trading volume was 9 million, right? So assuming this was midday. If this was near 5 p.m., then of course, yes, similarly, your likelihood of being done is very low because it's already left a few more minutes or a few less than 1 hour away from market closure. If you're queuing at 87, you're going to queue behind 8 million shares, which is already almost same as the whole day's trading volume. That is not that likely to be done. That's a decision-making process that you have as you have market depth to support your trading journey. Okay, same thing. Some people use the volume in the chart live to also support the price, what they see on market depth and what they see on the trade summary to support what's the actual trading spikes in volume when it passes by certain price levels. Right, so this is more significant for Singapore because we are usually, even though we seem like there might be some movement, but it's generally less volatile compared to Hong Kong and US. So when we have such data, it's easier to determine certain levels. But for US, sometimes within the same 1 minute bar chart or candlestick, you can see a very big movement of, let's say, 3-4%. Then that would be harder to determine anything through the chart volume itself. Okay. I see some questions along the way, so later I will then touch on them before I move on to the live data itself. Right. So basically, this is also another one. Right. So basically, beyond the volume at each price level, the number of orders is important, which is relevant to one of the questions. All right. I think let's say you have 5 million, five orders forming 1 million shares, or you have 100 orders forming 1 million shares in queue. There is a very different signal it might send to you regarding who is queuing up in terms of retail or instead of institution, or maybe it's a corporate or whichever entity involved, right? Or it can even be a matching for the ETF funds and sometimes do rebalancing. So all these are different issues. Okay. Okay, so I will speak a bit slower. I think there's some comments on the speed of my explanation. Okay, so I repeat again. So basically, there is a difference when, let's say, there's 1 million shares queuing, all right? And the 1 million shares queuing up to buy or sell is made up of either 5 orders or 100 orders, right? Because the average order size in that sense is either 200,000 or maybe only around 10,000 to 1,000, all right? Between the number of orders that is forming that particular quantity that is in queue. Right. So that actually gives you a signal as well as who is the market participants. Is it a retail level or is it institution level? All right. It also give you more idea how sensitive that price will be. Right. Because if it's only 5 orders queuing for that price level, even if let's say the next price bid, right? If any time 1 or 2 of the order is being withdrawn, it will actually form a very big significance of the impact to the market in terms of the queuing itself. All right. But if let's say there's 100 or 1,000 orders queuing to form that particular volume, then even if 1 or 2 orders is withdrawn, it will not usually impact that market depth, so-called that price levels, support resistance strength as much, right? So why is it important? Because sometimes some of the counters that you see, there is market makers involved. So even for non-ETF, there's market makers involved that helps SGX promote trading volume. All right. So these market makers, they might be prop desks, they might be institutions, they might be trading itself or traders themselves that are trying to touch and trade on a day trade basis to earn money. All right. So they might queue and then they might withdraw orders and place new orders based on the market movement of the overall market, not only on the counter, but overall market as well as the counter itself. And that actually cause you to be more wary whether or not you are selling to these block orders or you are looking to sell in a large quantity. Are you going to move the price a lot if you actually sell down one shot? Or if you're going to buy a lot, you don't want to also move up the price a lot. So if it's a particular one like this particular screenshot, of course it's not that bad, right? Because there's quite a bit of volume on both sides. But some counters that you might trade might have lesser queuing volume, let's say only a few thousand shares, then it might be fairly easy to actually break through that different price levels when you're looking to buy or sell in large quantity. All right, so that's where you might be more sensitive to want to know who are the market makeup of and each price level, how many orders is there in the queue. Okay, so basically three things I repeat. So you access liquidity, you visualize the price trend through the market depth, and then you can identify trading opportunity. Later, I'll touch on the actual platform to show you. But this is a screenshot of where to subscribe. So if you go to log in on our opponent's web browser, you can go to Rewards tab. Under the service, there is a free SGX market depth. You click on the checkbox, it will actually show a pop-up. You just acknowledge and you submit this particular one, and you will definitely just get it activated immediately. So currently it's free until 30th November. So there's still some time to apply for it. So do actually apply for it if you are available or if you have not yet activated this service. Okay, you can also access it through our promotion page to find out more details if you're interested. Okay, so visualize, assess, and identify. So generally, we also use it in collaboration with technical analysis. If you want to find entry level, exit levels, price support, price resistance, and find any trends involved, so you collaborate it, usage with the technical analysis as well. Okay, so for technical analysis, if you want to find some ideas, if you're not sure where, and before you trade on the market depth, you want to see what's some trading ideas, you can go to our chart. We do have a chart whiz that gives trading idea, or chart live itself is the actual charting of the counters that you are really interested in. There's also Trading Central, you can see some other trading ideas as well from others. Okay, so on our technical view, all right, there is a chart on the left-hand side, and there is this trade analytics on the right-hand side. So trade analytics involve market depth, trade summary, which I mentioned, these two, and the time and sales. So time and sale is basically the actual trading volume of the market for the counter. So at each particular time level, there's a different market feed. Let's say 100 shares done, 200 shares done, 500 shares done. So you keep on updating. So time and sale is the updating of the same day's trading volume, and then breakdown over the time. Of course, if there might be many orders, you might need to go to a lot of pages to find a particular time that you're interested in, right? But one of the things significant for time and sales is that you see a trend on the right hand side, is a buy up or sell down trend. So if you see this particular image in this case, generally most people are buying up, meaning more buyers are going into the market to directly buy at the ask price compared to sellers at the ask price selling down to the bid price. So in this case, it's more of an uptrend, bullish momentum for the counter for this particular price level at this moment. Okay. Of course, you see that the timing itself is only between 1310.29 to 1318.44. So it's a 10-minute time frame. It's not a very large time frame. And you might see multiple orders sometimes in the same time. So it likely is one buyer buying a quantity that is a lot, that is hitting of many orders that form this particular one. So let's say example 1310.29. You see from here, from the sell down here, 500 shares all the way down to the 2.2 thousand shares is still particular one. Same timing. So likelihood is the same buyer, right? Buying up all the way. But basically, there might be also this sell down itself is what? This might be when this buyer buy up all the way, right? You see the price is 9.48, on top price 9.49. What happened is likelihood this particular buy order exceeded the queuing of 9.48 at the ask price. So it bought everything that's 9.48 have to offer in the ask, and it became the next queue price of the bid, 9.48, remaining of 500 shares. And there might be some traders algorithm or whichever that when the price level move, they put in a sell order at the market price, and then someone sold to this particular order 500 shares. So that's why there's a sell down instead at 9.48. So this sell down at 9.48 will be the final order, final quantity done for this particular order for this buyer. So the buyer bought everything, maybe let's say 10,000 shares. All right, 500 shares was from a sell down. The rest was all buy up into hitting the market of the 9.48 at the ask price. Okay, so this is something you can actually take a look and understand when did the price level move the bid price. So instead of 9.48, 9.49, it now become 9.49, 9.48, 9.5, sorry, 9.47, 9.48, it became now 9.48, 9.49. All right, because the buying up is at 9.49 now. So buying up is the ask price for the 9.49. At the end of the day, I see auction. What is auction? Auction basically means it's the trading matching. It's the same as the block reason, right? So auction is not a buy and ask actual trading, right? It's not a lifetime. Every second there's a movement of trade, right? So auction appear 3 times in the trading day for Singapore market. Pre-market open from 9:58 to 9 o'clock. Post the lunch opening, pre the lunch opening itself. All right. So it will be 12:58 to 1 p.m. And then post closure is actually between 5:04 to 5:05. All right. So they will then form based on the market pressure on a few minutes before that. There's a market matching period, normally 5 minutes before that, or a bit more from a pre-market opening. Then they will form a price level that both is the same, let's say at 9.5 and 9.50. Then there will be a one side that have more volume, either the bid price or the ask price have more volume. Then they will be done and matched off during the market matching timing of the 3 different timeline. And then that volume will be blocked in as auction. It's not a buy up or sell down because it's an auction price at the point of time. Okay, so I think I roughly briefly mentioned some of the usage of market depth in the technical theory on the PPT PowerPoint. So I'll touch on the live one later. All right. So before I end, I just touch on the questions. There's one question on different broking firms show different figures. How do you explain this internal trading? Right. So different broking firms sometimes have different feed in terms of you're seeing what this either the time and sale or market depth or trading summary. Basically, the brokerage houses, they have different vendors that they have to bring in the market data, all right, or how do they massage the data to actually showcase this market data details to you. So each company might have different vendors. Sometimes the vendors have different sensitivity to the same timing. So maybe the same second or the split seconds, how they determine the different volume coming in. So there might sometimes be small differences along the way between different brokerages. All right. And some brokerages also have a different definition of either buy up or sell down, which I mentioned is either buying up at the ask price or selling down at the bid price. They might use different wording, right? There's a wording is different. Maybe they say buyer instead of and seller compared to buying up and selling down. Right. But buying up is someone hitting the selling price, right? But some people might put it as the ask price being done. So they say sold or seller sell down. So it depends on how they define the wording itself. Okay. Second one is how do you detect fake figures coming in on and off? Right. So there's 2 things. One is either there's really fake figures coming on and off, right? Either on the same price level where there's already a large quantity in queue. So for example, let me just show you this. Just now the Genting Sing one. Right. So Genting Sing already have such a large volume just now, right? So it's 1 million on the bid side and 5 million on the sell side. If let's say I queue in another 500,000 on the sell side and form it to 6.3 million, will it be significant to you? Yes, it might be significant in terms of the quantity. But is it actually realistic significance? No, not really, because you're not likely to actually expect 6 million shares to be done over a split second. There's very, very little trading volume that can move that quantity in a split second, unless it's a matching period, the market closure or market opening, or let's say there's something material news happen. All right. So when there's an on and off enter and exit queue, for the fake one, right? Usually it's more done for market matching, which is what just now someone asked on what is the auction, right? Matching period. Because the matching period is they are trying to find where there's enough buyer or sellers on the different price levels. So people will queue in different orders to try and test how many buyers are queuing to sell at 0.88, how many queuing to sell at 0.89, how many queuing to sell at 0.9. And the same thing for sellers, they are trying to test how many buyers are there at the different 0.875, 0.87, 0.865. They are trying to test what is the volume of strength on both sides. And then they will queue in their order to try to get the order done at the preferred price and also hit the quantity that they want. So there's 2 things. One is the price, one is quantity. You might want to sell a lot, but you don't really care about the price, or you might be sensitive to the price. So you only sell this volume at this particular price or that volume at that price. You might queue it in different things, or you might queue one very big order to try to cut the queue, right? So one example, if I show you here, let's assuming this is a matching, and the left hand side, the 0.875 is 0.88 instead, this matching. So it's not yet done, right? Because there's no actual trade volume done. So let's say it's 0.88. So there's more selling volume than buy volume. Okay? Meaning there's more selling volume and buy volume if you are a seller that's coming in, right? If you queue at 0.88 as well, your order will not be done, right? Because there's only 1.2 million queuing to buy at 0.88, assuming this is 0.88. So let me try to see if I can draw something. Give me a moment. Let me see. Draw, let's say this is 0.88. All right. Assuming this is 0.8. If you are a new queuer coming in to queue at 0.8, your order will not be done to sell, right? Only if you're a buyer, yes, your order will be done because there's more sellers than buyers. So what some sellers will do is that the seller will come in and say, hey, I will come in and queue at 0.875 instead, right? So I will queue at 0.875 and queuing, right? Let me see, 0.875. Right, so I cut a queue. But when I queue at 0.875, my order, the price of the ask will not move to 0.875. Because let's say I'm only selling 10,000 shares. Right, I will not move the market, right? Because the market, there's 1 million queuing to buy at 0.88. You will not move to the suddenly 875 price. You will stay at the 88 price first, unless when I queue in at 875, it forms a scenario where there's a lot of people actually doing the same thing as me. A lot of people are actually inside the 0.88. They're actually queuing to sell at 875. But 88 was the equilibrium price because of how the matching do. So how the matching works is that for SGX, they want to ensure there's a maximum trade value done of matching. So both volume plus the price. So it's quite a math involved, but when you try to cut queue, you might move the price or you might not move the price. So let's say 875, I don't move the price, my order will be still done at 88. I can still sell at 88 for 10,000 shares and I can get my order done, but actually I queued at 875. But if I move the market and I actually queue 875 and my order was like 875, then too bad. I have to sell and honor the deal at 875 because I queue at 875. Right? But there's a chance of me cutting the queue of the 88 people because when I queue 875, I'm actually in price priority over those already queuing at 88. So sometimes some customer ask me, hey, why I queue 8 since the morning? Then the matching was done 88. Why my order not done? Because there may be a lot of people cutting your queue. There might be even more people queuing in front of you before you queue. So those are different reasons. All right. Okay, so I hope I answered the question also. And also, sometimes there's real volume coming on and off. They withdraw and place new one is the market makers. So especially for ETF, they might queue at different prices, uh, different price levels when the market price move. But when the market itself move, they might withdraw and replace their matching, so-called their market making price levels for themselves. All right. So let me now touch on the platform.